Some analysis on what to expect for the Open on our market. Cameron Peacock joined us from IG in Melbourne now. Good to see you, Cameron. Good morning. What's your call for the ASX 200 at the Open?
Yeah, good morning, Bridie. Look, it's looking like being a fairly positive start for our market. Of course, yesterday we finished up 18 points or 0.4%, closed at 45.76. We did hit a high of 45.81 yesterday, which was 0.8 of a point off that year high, which we reached on the 18th of October. But given the fairly strong session we saw on across Europe and the US last night, we are calling our market up about 17 points or about 0.4% today, looking for that unwind around that 45.93 level. So we will print a fresh high for the year on the Open this morning, which is a positive. Obviously, it was a fairly positive session across the US. Most sector indices were higher. We can again expect to see materials having a fairly decent day today. We did see the iron ore price again higher overnight. It was up about 1.2%. Currently trading at around that $124.90 mark. Has had a nice run up from that sort of 115 level over the last couple of weeks. We've got BHP's ADR called up about 30 cents or 0.8% around that 35.71 level, and you can expect to see more money moving into some of those major miners, and that's been one of the themes of the last couple of days. We have seen some of those better performing sectors of the year being healthcare and telecoms, seeing a little bit of profit taking and some of that money rotating out of those sectors into some of those cyclical growth sectors, and it's no surprise that's why our market is sort of approaching those fresh highs of the year. And given the weighting of our market towards those sort of energy and resource stocks, and of course our banks have done very well, particularly since that rate cut last week, it's not a surprise to see our market up at these highs of the year. Yeah,
interesting day then. Okay, just wanted to ask you, because of course there was a lot of political posturing over the fiscal cliff on full display overnight, particularly with Boehner's commentary in the House there. What did you make of that?
Yeah, it was interesting. As you said, political posturing was on full display last night. Stocks did come well off their highs really after the politicians started talking. And what appears, evident is that as stubbornly as the Republicans are, refusing to sort of consider hiking taxes on the wealthiest 2% of Americans, the Democrats seem to be just as stubbornly resisting any meaningful cuts to spending and entitlement programs. And hence we've got this stalemate at the moment. Now, as I said, at one stage, the Dow Jones was up about 150 points, and there were some people speculating that the market was actually, warming to the idea that it might not be such a bad idea if temporarily we go over the cliff, because a whole lot of automatic spending cuts kick in from the 1st of January. But other people were just saying that the rally was on the basis of or on hopes of a deal being reached. But whatever the case, it seems a stalemate is certainly set in motion at the moment. We did have John Boehner come out saying that the President Obama was, really dragging his feet in budget talks and was unwilling to put any spending cuts on the table, but he was hopeful of a deal being done by Christmas. And then we had Harry Reid, the Democrat Senate Majority Leader, coming out pouring cold water over that, saying, it was going to be very hard to achieve a deal by Christmas, and he continued to refuse to put spending cuts on the table. So, the political games continue, and I think it's going to go right down to the wire.
Some of the commentators we were speaking to a little earlier were saying that a lot of the positive sentiment move higher on Wall Street certainly was due to expectations of just how aggressive the Fed might be with more stimulus over its meetings over these coming days. What do you think about that?
Yeah, look, I think that's a dangerous view. I think one thing that has really struck me over the last couple of years is how much reliance the marketplace is on the Fed, and that's partly been because Washington has been broken and has not been doing its job essentially on the fiscal side of things for the last couple of years, and so much emphasis and reliance has been placed on the Fed. There is obviously expectations of, I think, a $45 billion program being announced to sort of replace the Operation Twist, which is coming to a close, in mid-December. But look, I wouldn't be placing too much emphasis on the Fed. I think the fiscal cliff is still the main game in town.
Okay, good to hear. And also, of course, a lot of positive sentiment surrounding, Germany, because we had been worried. The commentary from the Bundesbank had been that, look, a recession in Germany is coming. But that zoo sentiment survey overnight, I mean, it really did seem to buoy markets and push the DAX higher. What did you think about that? And also some auctions in Spain and Greece getting away, pretty well?
Yeah, look, that ZEW index sentiment survey last night did sort of fly in the face of some recent data we have seen. There has been, the Bundesbank recently revised lower their German GDP targets, and there was a feeling that finally the problems in Europe were really starting to weigh on the German economy, and hence, last night's number was a bit of a surprise, and I think that was what sparked the rally. But the DAX has had a pretty good year. I think it is approaching 5-year highs at the moment, so the economy's maybe telling you one thing, but the stock market's telling you the other, something else. And generally, the stock market is seen as a bit of a forward-looking indicator. So maybe that's along with the sentiment reading which we got last night, suggesting that heading into 2013, people are hopeful that a lot of the problems of Europe are maybe a little bit on the back burner, and we can move forward into 2013.
Cameron, great to get your insights as always. We're counting down to the start of trade. Thanks so much.
Thanks, Bridie.